So good afternoon, everybody. I'm sure some of you have already been to these meetings before. I'm just looking at the names, a few familiar names there. So welcome back to Entrepreneurs Club on this sunny June day that's everybody's trying to struggle through at the moment. So the world has changed slightly again over the past few weeks. Now we seem to be talking more around the reopening of economies, businesses reopening, which sounds great. And there's obviously some things to consider that go along with that. And Jon, myself and Daniel have been discussing this over the last few weeks, just trying to sync up our thought process and be able to present something here today. So as you all know, Entrepreneurs Club will be running every sort of few weeks at the moment. And it's really sort of a safe space for business owners to meet other business owners and network normally in the old hall. But we've taken it as a virtual session for now. Just to give you updates as we're going through this COVID, so we're all prepared across Merseyside to come back with full gusto. So without further ado, I'll pass on to Jon, who's going to chair the meeting today. Same format as normal, which will just be a Q&A session. If you have got any questions, there is a button along the bottom or the top, depending on what device you're using, and it's a Q&A. If you hit Q&A, ask your questions on there, we'll answer them as fluidly as we can as we go through. So Jon, over to you.
Great stuff, thanks Alex. And as Alex says, if you ask any questions in the Q&A thing, we'll pick those up. We have a number of questions that have been sent in before, either via LinkedIn or by email, and the likes of people attending. So we'll work through some of those. Before I do so, actually, Daniel, can we just test your mic a second before I ask you any questions? Can you hear us, Daniel?
Can you hear me?
Yes, indeed. Brilliant. Okay. In which I'm not going to ask you the first question. I'll give you a second to compose yourself. As Alex had a few technical difficulties this afternoon. So in terms of the first question, before we do get Daniel onto the tricky subject of furlough, which of course again crops up again this time with changes coming into place next week, but I actually ask Alex the first one, which is about the markets. And the question we said is, the market seems to be going through a strong bounce over the past few weeks. How does this compare with previous recessions?
Well, it's interesting really, because it's very easy to plot once we're a significant distance away from everything going on at the minute. It still very much feels like we're in the eye of the storm. But we have, you're right, the person that wrote that question, you're right, that we have gone through some significant recovery period in financial markets, that is. So if anybody out there is running a pension or their own investment ISA or something along those lines, and you've been checking it anywhere near relatively frequently, what I would have expected to have seen over the past 8 weeks is quite heavy losses in the first sort of period in March kind of time, but then actually quite swift recovery in that. So I think that actually there's some crazy stats out there. I think that it was technically the definition of moving from a bull to a bear market. One of the definitions is a 20% loss on a major index. And then returning to a bull market is the inverse of that. So a gain of 20% or more off the bottom. And technically speaking, for example, the Dow or the NASDAQ, I can't remember which one it is over in the US, that had the shortest bear market that's ever been recorded in terms of a great financial problem. So if we were to track them at the moment, actually, we did a little study the other day trying to have a look at the differences between the downturns. This is tracking very similar to 1987 at the moment, and we've compared that for 1987. We've looked at 1992, 1998, 2003, 2009, all of which were downturns. 3 of those, actually, I should point out, were all stated at the time as once in a lifetime events, but there's, as you can see there, there's 6 on one scale, so that's definitely not once in a lifetime. But it's tracking similar to 1987. That doesn't necessarily mean it will continue to track like that. It's been very strong recovery so far, but the thing to point out with 1987 was there was 2 further 10% falls. I think it was within a year of 1987, big fall. So what we're experiencing at the moment, or the conversations we're having, is it'd be very nice to think that the recovery is a V shape, and certainly actually some attributes of it so far have been a V-shape. But a lot of our fund managers and the analysts that we work with are remaining on the cautious footing, and I think that it's a case of not becoming too greedy with the market and assuming that things will continue in the same vein. If anything, volatility is still there. The markets have been quite volatile, and we're probably expecting more volatility. So with a lot of the fund managers that we work with, they're saying that a lot of the US market in particular is driven by non-professional investors or retail investors that are piling into the market. But their adage is that they're taking a cautious approach, buying companies with strong balance sheets that they think will be able to get through this period and get through to the other side of COVID-19, and then ones that perhaps have some form of either technological advantage or an advantage insofar as that is what consumers will be buying in the future. So hygiene products, flu vaccines, greener energy, greener cars, that type of thing. There's going to be a different market when we come through this, and trying to position ourselves to buy shares at a discount at this point is quite important. So tracking wise, very similar to 1987 so far. Will it continue to be that way? Who knows? I think the big difference between now and 1987 is in the US there's $6 trillion in the system that wasn't there in January. Here we've got close to 500 billion in the EU. There's a similar amount, and it looks like there's going to be more financial stimulus possible. But what we don't really want to see is just all the financial stimulus being the number one buyer in the market. We want to see normal trading levels returning at some point over the next few months. So that's where we are so far.
Great stuff. Thanks, Alex. Now, if I can then, Daniel, obviously, firstly, welcome to the panel with Victoria not around today. Obviously, Daniel and I have kind of worked together before on a few things. Actually, it helps me with my HR. And I am going to ask you then about furlough. Now, we've got a lot of queries here about the Flexible Furlough Scheme, which comes in on the 1st of July. We go into a few detailed ones, but firstly, it could be useful if I can obviously talk about cash, if we come to cash and what's getting funded, but you just talk about what from a staffing level or HR level, what are the changes to the furlough scheme that should come in next week? Actually, sorry, you're on mute, Daniel.
There we go. Okay, so in terms of the changes from the 1st of July, as at present, staff have been able to be furloughed, which effectively means they've been laid off for a period of probably weeks or months. So the Flexible Furlough Scheme effectively enables businesses to build themselves back up in a short space of time. So as businesses start to open, they may find that they're able to trade, but not fully. So for example, if we take the hospitality industry, because of the nature of social distancing and the ways they have to operate now, they may say, for example, we don't need a full quota of waiting staff, bar staff, so we only need people in maybe 2 days a week. So the flexible furlough allows people to effectively choose the hours that they need staff in and furlough them for the rest of the week. So let's just take a normal office environment, Monday to Friday, 9 to 5. So you could say, well, actually, we don't need, for example, legal secretaries in 5 days a week, but we need them in 2 days a week. So therefore, you could furlough them for 3 days a week and bring them in for those 2 days a week. So for the 2 days a week that they're working, they would have their full daily salary. For the 3 days a week that they're furloughed, they would continue to be furloughed either at 80% under the government scheme, or if you're continuing to top up, you would pay the difference. But effectively, it gives businesses the flexibility to vary their working staff scheme during that period. It's on a week-to-week basis as well, because obviously the nature of business build-up could be that there's quite a big ramp-up, or it could be quite a sort of slow trickle. So it allows businesses again to focus potentially weekly on what their needs might be, and then to tailor that accordingly and use the Flexible Furlough Scheme to help them go through that.
Great. And I think so in terms of then, I guess, kind of administering it. So are there things that one of the questions is about that to date there's been a minimum furlough period of 3 weeks. Does that change with flexible furlough? How flexible is flexible?
Well, it's now on a week-to-week basis, so it can be much more flexible than the 3-week rule, because I think part of the difficulty has been that people have been furloughed on these 3-week consecutive breaks. But this allows a lot more flexibility, because businesses will start to increase in terms of their turnover, their work in progress at different levels. The hospitality industry is probably going to go quite slowly because of the nature of seeing how footfall goes, whereas office-related businesses may increase fairly quickly. So the beauty of the flexible furlough scheme over a weekly period means that businesses can track it almost weekly. They may see big orders come in. So week 1, they may say we actually need people 2 days a week. Week 2, they may say actually we need you back 3 or 4 days a week. So it allows that sort of weekly flexibility depending on the nature of the work that comes in, really.
And I think for us as an accountant, it's going to be interesting and perhaps tricky in terms of actually keeping track of the claims and everything. I guess will be one of the things with the part-time nature and the amount of flexibility. And in terms, again, around the flexibility area, we've got quite a few questions on this, and I'll stick with it for a second if that's okay, because it just runs quite nicely. So, as an example, and one of the questions is about, I've got somebody on maternity leave, who's been on maternity leave to date. When they come back, they'll be furloughed, or they're due to come back.
Sorry, was that about maternity, did you say, John?
Yes, sorry.
Yeah, so there was a cut-off at the 10th of June for anybody who had previously not been furloughed. There was a cut-off date of the 10th of June, but there was further guidance released, I think it was last week or the week before, that says that if anybody is returning from a statutory period of leave, so for example, maternity leave, statutory sick pay, adoption leave, etc., that those people could still be furloughed and they wouldn't have to fall in line with that 10th of June cut-off. So if people are coming back maybe middle of July, end of July, etc., they could still be furloughed until the end of the furlough scheme, which at present is the end of October. So yes, they could.
Right. And in terms of the furlough as well, in terms of the one of the questions, or quite linked to that as well, are about what if you need people back in work, but they've got no one to look after the children? How does that work in terms of, I guess, HR, but also the furlough scheme?
Yeah, so present, the current guidance is still that those who have caring commitments, whether that's school children, caring relatives, etc., they can still continue to be furloughed. Now, I think the challenge for businesses, both from an HR perspective and also from a financial aspect, as you'll be aware, John, is that businesses may say, well, okay, that's fine, but from 1st of August, obviously they've got to pay the national contributions, the NI contributions, the pension contributions. September, they've got to start paying the 10%. So I think the challenge for businesses is those people who have those caring commitments can still be furloughed, but the business will have that cost to bear. So it is a bit of a tricky situation. Putting my slightly cynical political hat on now, it does seem a little coincidental that we are now able to see other households from the 4th of July. So it seems a bit coincidental that grandparents may be able to take up the summer holidays, etc. now. That may be me just being a bit cynical. But that does kind of fall in line quite well with the summer holidays and the challenges the businesses would have if employees were saying, well, look, I can't come back to work full time or at all because I've got those caring commitments for the children, the summer holidays, school, homeschooling, etc. So it does fall quite nicely now that from the 4th of July, and not far off the 1st of July actually as well, that parents could potentially say, right, we'll send the kids off to the grandkids, grandparents for the day, or for a few days or whatever it may be, so they can obviously then come back to work. Particularly if businesses are going to use the flexible furlough, that might work quite well if they wanted to come in for a couple of days a week. They could then say, right, the kids can go to the grandparents while I'm going back a couple of days a week.
I'm going to ask you one last furlough question. It just links quite nicely rather than break it and come back. Is if one of my staff refuses to come back to work, and I guess that could be because of childcare, it could be because they're worried about coronavirus or shielding for any reason. Somebody refuses to come back and says, therefore, I have to keep them furloughed. What are my options as an employer?
Okay, so Yeah, so it really depends on the reason why that is. So if they've got those caring commitments, that sits quite nicely in the furlough scheme that they can continue to be furloughed. If it's a general, I don't want to come back, I've enjoyed my time off at home and I don't really want to come back, I've had 80% of my salary and not had to do anything, then that might be a difficult situation to deal with. So if they've got those reasons that it's just they don't want to, or they have a fear of coming in, those are genuine fears that I think everybody has, not just people who are coming back to work, or even going to the supermarket. Now people are starting to relax a bit more, they're trying to find the oranges or whatever it may be. So I think if it's just a general, I really want to come back, I don't feel safe, provided that you as a business have carried out your risk assessments, you've shared that with your staff, you've put the measures in place to make sure that people are social distancing, that there's things like one person in the kitchen at any one time, there's hand gels to be used. As long as you've carried out your risk assessment, then it could be deemed as a breach of contract on the employee part. Therefore, you could take them to a disciplinary. It's a reasonable management request. The government guidelines allow people to come back to work now. There is still that issue that those who can work from home should work from home, but again, it's guidance, so it's not saying that everybody must still work from home, it's saying that they should. Now, the nature of business is, I know a lot of businesses in the office environment have started to reopen just to get people back into the swing of going into this holidays, etc. So as long as they are carrying out the health and safety requirements, then in my view, those people can be brought to disciplinary. The only thing is obviously to make sure that if you are asking certain people to come back, that you're aware of protected characteristics, so that the people that you are bringing back aren't of a certain protected characteristic. So, for example, working mums, a certain ethnic background, a certain religion. So as long as you're not discriminatory on the basis of the people that you are asking to come back, then there's no reason why you should be saying, well, unfortunately, I can't take you being off for the next 2 weeks, 2 months, whatever it may be, so therefore you are due back. And they are certainly some of the questions that we're starting to get now, John, is we are getting staff reviews and what can we do? Can we terminate them? And those questions are things that unfortunately people are starting to come through to us with.
Thank you. I'm going to let you off the hook now, although if there are a few questions about redundancy later, which you perhaps alluded to there. But for the moment, Alex, I'm going to ask you a hard question instead, which is, what is happening with our currency? It seems to have fallen through the floor.
Yeah, they probably wouldn't be wrong in saying that, to be fair. So, okay, so where do we start with currency? I suppose if we have a look at the currency sort of over the past few months, just getting some details up here. Currency has been really volatile, and a really strange thing happened last week. So it just shows you how much currency is, how volatile it can be based on purely hearsay. So a lot of trading and a lot of sort of financial stuff is based on hard data and reports and accounts and so on and so forth. But for example, I think it was last week, Boris Johnson stood up in the House of Commons and said that there would be draft legislation around Brexit released by the end of July, and we'd probably be able to get most of the Brexit issues done by the end of July. There's no data to do with that. It was just something that he said. So akin to hearsay, really. And if you look at the data on what happened to sterling that day, it had a real bounce. So we recovered quite significantly that day. But ultimately, our currency has been suffering quite a lot in this period, which has then impacted our stock markets as well. So it's suppressing our stock market growth. I mean, if you look over in the US, their stock market has gone through quite the resurgence. I think that the NASDAQ now, which is a tech-heavy stock index, believe it or not, is now at an all-time high. So I'm not saying an all-time high this year. I mean, an actual all-time high. It has never been higher. I saw it pushed the other day through 10,100 points over there. And I think that it was somewhere around 9,000 at the worst of things. So they've seen a bounce of sort of 40%. But I suppose that's sort of how their indices made up over there. So it's tech heavy. You have sort of FANG stocks of Facebook, Apple, Amazon, Netflix, Google, and Microsoft, all of which are super high cap values. And we don't have the same tech exposure over here now. The two real stocks which have benefited in this crisis in terms of economically are tech and healthcare stuff. Now we've got AstraZeneca here, but over there they have Moderna, they have Gilead, they have Johnson, they have a number of different ones over there. But it's almost like when this happened, well, actually before then, back in December, it's almost like Brexit just stopped being relevant anymore. People just scrubbed it out and went, we don't need to talk about that anymore. But Brexit for us is still a big area of uncertainty. And I think last week's shift in terms of a significant bounce in the currency exchange rate for sterling, just by Boris Johnson saying that we might be able to get Brexit done by the end of July, it actually shows how heavily that's been weighing on our sterling in terms of just the sentiment which is still in the marketplace. So whilst we might not talk about it day to day because, well, one, we can't see people or talk to people face to face anyway, but COVID-19 is a much bigger story now, and it all seems to be done and dusted. Brexit has not gone away. It is still in the background. There are still trade deals being worked out. There are still fishing regulations being worked out, and all that uncertainty. We kind of knew that would weigh on our currency. I think that that wasn't really talked about enough. We thought that would happen, but ultimately, I think that it's majorly to do with all of that uncertainty which surrounds our economy and our country still. Being our indices, our major economies, if you want to look at it that way, in the UK are energy companies and banks, and both of those have had a real kick in this situation. If we did have more of a tech or healthcare-led economy, then there would be an argument to say that uncertainty wouldn't be as high, and would probably be in a little bit more growth phase. But that's just not the way our economy is made up. So it's partly to do with our economy, it's partly to do with the uncertainty that's going on with Brexit and a few other issues.
Thanks, Alex. I'll ask myself one now, actually. It links quite nicely, actually, with the live question we've got as well. So one of the questions sent in beforehand was about the self-employment grants, and the question was that I claimed the first self-employment grant, been told I might get the second. Why is this? So just to step back a second, the self-employment income support scheme is for self-employed people to give them support to coronavirus. The initial grant was to cover March, April and May. And the idea was that it took self-employed persons' average monthly trading profits for the previous 3 years and would pay 3 months worth and pay 80% of that. So to make it nice and easy for me, if your profits were £12,000 a year over the 3 years, it's £1,000 a month. You'd be paid 80% of that, so £800 a month, 3 months, you got a lump sum of £2,400. Now, the scheme's been extended now to cover the next 3 months and could be claimed in August. Again, it'll be a lump sum payment. Rather than 80%, it'll be 70%. So in my simple example of £1,000 a month, you get paid £700, 3 months worth, £2,100. Now, it is possible if you didn't claim the first grant or weren't eligible, you might be eligible for the second one or vice versa. And the core eligibility criteria are exactly the same. You must have been self-employed before the 5th of April 2019 and have filed a personal tax return for that year. That's partly to avoid people suddenly claiming they're self-employed and deserve a grant. Your annual profits must be less than £50,000. And simply the amount paid was capped at £2,500 a month. So the core criteria are basically the same. The one thing though, when you claimed that you had to confirm, and it was on you and your honesty, I suppose, is that you're only eligible if you were adversely affected by coronavirus. And there's been some debate about that actually, because you still have to be trading, but you should have had some adverse effect. What HMRC or the government have done a couple of weeks ago is actually publish some examples of what they mean by that, to say who is or who isn't eligible. And they have basically Builder as the example, and it kind of has that, you know, one of the examples is that, basically she was unable to go on site for a month, therefore she's adversely affected. Another example was that actually had coronavirus for a couple of weeks, and because it's actually an all or nothing, you're either adversely affected or you're not. You can't be a little bit adversely affected. So whether it was 2 weeks of no work or 3 months, you're adversely affected. And the point is that you may have been adversely affected in the last grant, but you might be back now working fully. And one of the examples they give is basically the site was closed for 2 months, it's now open, and the example builder's working fully and therefore can't claim a new one. So really, the difference simply comes down to whether you are adversely affected, and that's the government does have a few examples of that to help. Now, one of the live questions actually is about one of those eligibility criteria, because for initial grants, it was if your average profits were above £50,000, you got nothing. And I think, like a few of the things around coronavirus and the support from the government, it's a very kind of blunt instrument. It's quite black and white, and it's all or nothing. So by earning £1 more, you went from getting £7,500 grant to nothing. There was talk that they might reduce that profit limit for the second grant, and that's what the question is about. They didn't go ahead with that, so the limit is still £50,000 per year profit for the second grant as well. That wasn't changed, it remains exactly as was, so that answers the live question as well. We alluded to what's talking about furlough, Daniel, at the end, perhaps as if some few come back, disciplinary and termination. Probably more common right now will be redundancies, and we're now reaching a point where businesses, I guess, have to make a decision, because come the start of August, furlough staff will start to cost an employer money because they're contributing towards it, and with notice periods and what have you. And we do have a few questions about redundancies. So the first one actually is, can I look at redundancies like right now if people are being furloughed? What should I be thinking about if I'm conscious that come the end of this paid furlough period at the 31st of July, probably isn't a job? What does an employer need to be thinking about now? Sorry, Dan, you're on mute.
Where we started in terms of businesses starting to reopen, part of that and part of the furlough scheme is that businesses will start to assess the nature of their headcount, what they'll need in terms of going forward. So it's a bit contradictory, the CJRS, the coronavirus job retention scheme, when businesses are now saying that they may potentially need to consider redundancies, but it's part of the whole issue that everybody's having to deal with, to look at headcounts, etc. So it isn't unreasonable for businesses to start to think about those, particularly like you just said, John, with the 1st of August contributions from businesses. They need to assess their overheads, particularly if they are going to make people redundant, and if they've got the 2-year service, they need to start thinking of those types of things, of how much is it going to cost me if I have to make people redundant, because what businesses should start to do is have some sort of financial strategy to say, well, look, for example, if I keep everybody on, it's going to cost me X. If I make these people redundant, it's going to cost me Y. So they need to assess the whole business and also assess the cost of keeping the whole staff on, or maybe making some of them redundant. So businesses are starting to make those decisions, and again, that's one of the most common questions that we're getting at the moment is, can I start to make redundancies? We've certainly gone through a lot of clients, helping them go through the redundancy process. We've done some of the consultations for them if that's what they've wanted. So there's nothing within the guidance that says that you can't, because if as a business you don't need those overheads, provided there's a legitimate redundancy situation, you can go through that process with the staff members. So it is going to be difficult for businesses, it's going to be difficult for employees, but unfortunately it's just another knock-on effect of the whole crisis that everybody's going through.
And if I have staff and I'm thinking of redundancies, conscious of what people have been on furlough, and to be fair, this is whether they're coming back from furlough or being made redundant, but it was asked around the redundancy one, is people, I guess, have accrued holiday, and therefore, if they're made redundant, would be owed a chunk of holiday. So can an employer make staff take holiday before the redundancy date? How does that work in terms of making staff take holiday?
Yeah, so there's a number of things that people can do, whether you're in the redundancy situation or not. You can force your staff to take holidays. So that could be one of the number of things. So if they've already got pre-booked holidays, to say, well, okay, you may not be going off the south of France for your summer holiday, but we still want you to take that week, 2 weeks, 10 days, whatever it is, off. If you want to force staff to take holidays, so you obviously take down that accrual, you can force them to do so. And all you do is you write to them to say, we want you to take, for example, week commencing the 20th of July off. And all you need to do is give them double the notice of the amount of time you want them to take off. So, for example, if you want them to take a week off, you'd have to give them 2 weeks notice from the date from when it's due to commence. So if we use the 20th of July as an example, you'd need to give them notice by no later than the 4th of July for a week off, week commencing the 20th of July. So yes, they do still accrue those holidays, and that is something that businesses need to be conscious of, because at least during the furlough scheme, whether it's either pre or post the 1st of August, at least there's the benefit of that cost contribution towards the cost of the holidays. But holiday pay must be paid at 100% of their salary. You can't reduce it down to the 80%.
And as an accountant who runs the payrolls, or one of my colleagues runs the payrolls, that topping up of holidays has obviously been quite a tricky calculation when people are taking holidays naturally as well, kind of away from this. So to an extent, if somebody is making an employee redundant on the 1st of August, for example, could they effectively get, I suppose, the government to pay for 80% of the holiday cost by making that person take holiday between now and then?
Yeah, absolutely, and that's certainly another thing that businesses can do, is they can use the notice period to say, for example, we want you to take all your accrued holidays during your notice period. So if people are on, for example, a month's notice and they've got 2 weeks accrued that they need to take, that would fall quite comfortably within that month's notice period. So again, it's just something for businesses to bear in mind, that if people are on, for example, shorter notice periods, maybe a week or two, then they may find themselves in difficulty to give them that double the notice period. So they may find themselves with quite a hefty holiday pay accrued bill, as well as the notice and potentially redundancy. So I think the timing of these decisions is quite crucial because of those issues, particularly the double the notice, if people have accrued quite a lot of holidays, because if you're on your normal 28 days a year, you accrue roughly about 2.5, 2.6 days a month. If people are on furlough by August, the best part of 4 or 5 months, there's a good 10 days of accrual. If your holiday year started in January and people haven't taken that time off, then you're going to be looking at somewhere between about 15 to 20 days holiday by the sort of end of August, early September. So again, it's just something for businesses to consider in terms of the planning of these decisions and these consultations.
Thank you. There's quite a few questions around that. I guess it does the fact that there's a cost to employers from the 1st of August is probably starting to focus people's minds a little bit. So Alex, I think had some happier questions. One of the questions about pension contributions. So I'm looking to start my regular contributions to my pension scheme again. Is this now a good time to be doing this?
Yes.
Short and sweet.
Yeah, no. Yeah, it definitely is. I would say I think it's quite normal that during a period of volatility like we've been through, that people would stop contributing to personal pensions or pension plans. But actually, really, that shouldn't be the case all the time. I think that we are emotional creatures, and that definitely plays through to our investments and our pensions. Now, really, if you were to look at it, regular saving benefits from something called pound cost averaging. So every month that you pay in, you buy the units on that particular month at that particular price. So it's almost less price sensitive month to month than it would be, say, investing a lump sum, because you buy yourself an average price over the lifetime. For example, if the market falls, well, actually that month your money will go in, but it will buy up more units that particular month, which then in the long term, those units will probably do significantly better. So retrospectively, I think if we'd been speaking to people that have been stopping premiums in that period, we would have actually been saying, as long as it still suited their plan, i.e., their plan is a 5-year window, a 10-year window, 15 years away from retirement, we'd absolutely be saying, carry on doing what you're doing, keep those direct debits going and keep them alive, and keep buying those units at a cheaper price. This will only benefit you in the long run, assuming that the markets return, which we have seen quite significant returns. Now, where we are at the moment, the same adage, I would say again, that having a regular contribution being fed steadily into the market every month and benefit from that pound cost averaging is undoubtedly going to be a good thing for the long-term planning. If that particular person that asked that question has a short-term plan, obviously then it becomes a little bit harder to predict if they've got sort of 5 or 6 months for example, until they actually retire and touch the pot. Then it becomes a bit more of a harder thing to work out. But if we've got the right length of time, if we've got 5, 10, 15 years with these type of things, and we are invested in a diversified pot, for example, it's the easiest way to drip feed money into the market. So if you go back to 2008, professional investors at that point were actually doing pound cost averaging in a bit of a different way, but it's the same principle insofar as if they had £1 million to invest in the market and they were a bit unsure whether they should invest it in this month or next month or the month after. What they would do is just be disciplined, have a process and say, well, I'll invest it over 10 months, I'll invest £100,000 a month and I will drip feed the money in for 10 months. And then that will mean that I've bought myself more of an average price over that period of time. So yes, to that person, absolutely. Get advice on your plan, make sure that your direct debit fits your plan, but I can't see any reason why drip feeding money into the market at this point would be a good thing for you.
Oh, thanks, Alex. I'll throw a couple at myself. There's a couple of so a live one come in as well. I'll cover the one I was about to cover. There's a couple of quick ones about VAT actually. One is somebody says, I cancelled my direct debit when coronavirus started, but still have received threatening HMRC letters. Is there anything I can do about this? And then also another one asking about the potential of further kicking of the can down the road with VAT and allowing people to put the VAT bills back even further. These questions, I guess, to extent around the fact that what HMRC or the government to help people with cash flow during current situation was that you were allowed to defer your VAT bill that was due in April, May or June this year. So any VAT bill that was payable between the 1st of April and the 30th of June does not need to be paid until the 31st of March next year. There'll be no interest or anything on that. That's kind of fine. So you'll still have to pay it, just you get, a year of grace to do so. HMRC themselves actually wrote to all businesses who had a direct debit to actually suggest, please do cancel the direct debit, because it's an automatic system where we just pull down the amount once you submitted your VAT return, because you start to submit the return you need to pay. So if any business cancelled that direct debit or just didn't pay anyway, there should be no penalties at all. So if HMRC have written any sort of letter or threatening letter, it's just worth giving them a ring, because it's a mistake. As long as, let's say it was a payment due in between the 1st of April and 30th of June, you don't need to pay it. It's a mistake, the letter. Give them a ring and they should be able to sort out quite simply. In terms of the other half of the question about will there be any more deferrals, at the moment there's no word of anything else. HMRC are being very lenient at the moment, and by that they're instructed to do so. There is a special line that if you're struggling to pay any HMRC bill, whether that be VAT, corporation tax, personal tax or PAYE, there's a special helpline where you can ring and they will give you an extension on paying it. They'll charge interest, but the interest at the moment is at, I think, 2.6%. It's quite a low rate of interest, but again, they will allow you to defer it just by giving them a ring. But there won't be, unless anything changes, as we sit here today, there is no additional allowed deferral with no interest or no penalties. They've kind of done their bit and created that cash flow gap. And actually, I've seen a live question actually, which isn't about VAT, but the other thing that HMRC have allowed people to defer is that with personal tax, with income tax, self-employed people were due to make a payment on account on the 31st of July. Income tax is basically paid twice a year, 31st of July and 31st of January. The government has allowed everyone to defer the 31st of July payment until the 31st of January 2021. Same idea, you'll have to pay it, but you get 6 months grace. So it's a cash flow advantage rather than a grant. So kind of that's how that is. A number of our clients are paying anyway, actually, have taken a view, actually, well, I'm just deferring a problem, and I'll have a problem paying it in January, income tax, March for VAT. But many are saying, well, actually better in my bank account than HMRC's for the time being, just knowing that it's put aside in a savings account, a deposit account, so they know it's ring fenced and then got to be paid. So that, I think, comes the live question as well, hopefully. Just to tack on one quickly about the pensions, Alex, there's one about actually in terms of looking at the pensions, but also understanding their positioning ethically. How do I make sure my pensions live up to ethical standards?
Yes, this is a really interesting question, actually. So it's quite a hot topic. Partly, I think, because of the COVID-19 disruption, it has made people question a few things that have been going on more widely across the planet, and it's given people time to sit down and start to understand these things. It's something that we're quite heavily bought into, actually. So we've now reached a point where 100% of our managers are signed up to something called the UNPRI, which is the United Nations Principles of Responsible Investment. And at this point now, we've refused to work with any fund managers that don't sign up to do this. Now, we're the only ones within the UK, we understand that, are doing that. But if you wanted a quick and easy guide, then checking things like the UNPRI is a nice way of sort of figuring out what people's responsible outlook on investments are, because there is still quite a lot of investments which unfortunately aren't as responsible as perhaps they could be, or perhaps the focus isn't there. And this is it should be the movement is more of a bottom-up approach. So I think once investors start moving their money and interrupting capital flows in that type of way, we will see more fund managers and fund houses and wealth management companies changing their tact on things. You can also look up as well carbon footprints against MSCI data. That's all available there. And we'll be publishing some data actually in the next few weeks about how to check on these things. But the term now about sort of, there's a number of different terms, but they all fall under this responsible investing or RI category. So what I would suggest for that person is do a bit of Googling, have a look at the names that are involved in the UNPRI, have a look at that, and then start having a look at your own investments. So it's pretty straightforward to either engage with a financial advisor or check them yourself. And the UNPRI will have a full list of the people that signed up to that or due to sign up to that. And just have a look at your own investment companies and the names of your investments and start to see whether they're on there. If they're not on there, then they're not signed up to it. It doesn't necessarily mean that they're not responsibly invested. It just doesn't mean that they're signed up to one of the largest sort of global bodies to do with it. So delve a little bit deeper is probably the idea. There was a study done last year with a company called Nordea, who I geekily went to see over in Sweden. I went to take a photo of their building while I was over there. And so Nordea are really good at responsible investing and getting data to do with that. And they came out with an amazing stat, which is, we all know in our day-to-day lives the things that you can do to potentially benefit the how do you put it, the climate. So, you know, taking less flights, driving a greener car and having greener energy in the house and things like that. But Nordea did a study which said if you have your pension or your investments aligned responsibly, then that will be 27 times more effective than anything else that you could do, because there is trillions of money flying around in the system. And as soon as you start to interrupt the flows of that capital, then Nordea arrived at the figure of 27 times. So it's a really hot topic at the minute, quite rightly so. It's something that we're quite engaged with. So there you go.
Thanks. Remind me not to come on holiday with you, Alex.
It's fun other than that.
They count as a boy. We've got, because we started about 5 minutes late, so we'll probably go on till about 25 to, and we'll have a last section actually about returning to work. But before we kind of move on to returning to work, I'm just going to mop up a couple of quick questions about grants actually. One is, I've not been eligible for any grants, will there be any others? And another is actually, I've had a grant, will there be any others? In terms of the grants that are still available, if you haven't had anything to date, and some people kind of, I guess, have missed out and not had anything. One of the main grants was either the small business grant or the retail and hospitality grant, which was for people basically with premises and rates payers, which a number of small business qualified for and either got £10,000 or £25,000, depending on what sector they're in and the value of the building and the rates they pay. There has been a discretionary grant since then to effectively mop up the people who have premises costs but missed out. So, for example, people who were not the registered rates payer, people who were paying rent within a shared workspace, bed and breakfasts covered who kind of missed out last time. But it's a discretionary grant, and each council has slightly different rules on how they're awarding it. It's entirely up to the council. It's a limited pot. So the people who are eligible are broadly the same, but it's on you to apply. So if you are in Liverpool and under Liverpool Council, the way they're divvying it up is that if you're a small business and you missed out last time, but you do have premises costs, you apply, show how you're adversely affected, but then they'll actually pay up to £10,000, and it's in bandings depending on how many employees you have. If you've got more than 10 employees, you get the full £10,000. If you've got one employee, you get £2,500, and there's a banding in between. Other councils, it's totally down to what you put in, and they're asking basically how much money have you lost, and we'll take a view. Or some we've seen is simply asking what are your premises costs, and we'll take a view. So it's worth keeping an eye on those, and if you have premises costs, looking to apply for that. There's also another grant actually, which is not a government one, but Enterprise Nation, who do a lot of support for small businesses, have a pot of money funded by Salesforce, which is a kind of software, where if you have missed out on all other grants, and that's one of the criteria, you've got nothing else paid to you, you can apply for £5,000 grants for them. If you go to Enterprise Nation's website, and actually in a second, actually when one of the guys is talking, I'll put it into the chat room, actually, bring it up. They're doing that regionally, and if you're in the north of England, it's basically the tail end of July, you can apply for that. So there are a few other things kind of knocking around. At the moment, it appears unlikely there'll be any new government grants. I think the current grants run until, or the self-employed until basically through till August, furlough through till October. It looks like that's probably it. But obviously things can change. Perhaps if there's a second wave of coronavirus, that might change. But for the moment, really, I think everything that's going to be given out has been given out or announced. So those are the grants. So in terms of returning to work, got a couple of detailed questions, and then we'll perhaps talk as a panel about our views on returning to work. Obviously, we can see Daniel's in the office now. I know Alex and our offices are going to be open again very, very soon. So on an HR front, if we do begin to allow staff to work from home more permanently, we reopen the office, but we're letting people work from home some of the time, or even permanently once we're back to normal, do we need to change their contracts?
It depends what their current contract says. Normally, a contract of employment will specify where somebody needs to work. So, for example, your normal working place is number 1, the Strand, or whatever it may be. But there's usually a bit of a mobility clause that says we can ask you to work wherever is reasonably required. Now, technically, you probably should, to say we also will allow you to work from home. Now, that can be done by way of a simple addendum to the contract, which is effectively a letter to say, following our discussions, because of the nature of what's going on, we will allow you to work from home for a significant period of time, the foreseeable future, whatever it may be. Now, that could come either because of the business decision, or it could come from the employee requesting to work flexibly, to say, well, actually, I've got the benefits of it, the environment's better, I'm not commuting, etc. So it could come one of two ways. So it could come under the flexible working if the employees requested it, or it could come by the business to say, well, actually, for example, we used to have 20 staff in, because of social distancing, etc. We can only have 10 at one time. So we need people to work from home, for example, 2 days a week, 3 days a week. I'd be surprised if any employee would, at this present point in time, refuse to work from home for part of the time anyway, because I think everybody has found some benefits to it, some disadvantages. But I think on the whole, I think that certainly the feedback we've got from our clients and their employees is that it's been largely beneficial. There hasn't been a huge downturn in productivity. So I think certainly if businesses are going to kind of force that issue to say, well, actually, we've seen the benefits ourselves. For example, we may look at reducing our premises sizes, those sorts of things. Technically, it's a change in the terms and conditions of the contract, but it's more of a favourable change. So in that term, I think generally you would change it, but just check the mobility clause within your contract, because it may allow it to do that in any event.
And in terms of, Victoria spoke at length last time about actually stuff that an employer has to do before you allow people back into the office. Obviously, with some of the changes over the social distancing and go from 2 meters to 1 meters plus and the likes, just at a high level. I mean, you and I are talking in real life about obviously me reopening my office and what have you. But at a high level, what do people need to do before letting the staff back in?
Yeah, so the government website and the HSE website have got quite detailed plans as to the things that you need to consider. So things like making sure that all the desks are 2 meters away. If you can't do that, to make sure they're, for example, back to back, or that the screen's in place, those sorts of things. The measures that people would need to take, such as, for example, only using the kitchen one person at a time, making sure there's hand gel available. So there are quite detailed guidance notes from HSE. And also from the government website as to sector-specific offices, call centres, those sorts of things. So there's quite a lot of information out there already, certainly from those two sources. And then there's a lot of health and safety companies out there that provide risk assessments and carry out risk assessments for businesses. To some extent, that's probably better than doing it yourself if you've got the funds to do it, because at least you know it's been outsourced. If there's then any comeback for a business, you can say, well, we outsourced it to a reasonably proven health and safety company. So if there's any issues, if somebody does then say, well, actually, we've come back to work too early, you've not taken account of this and the other, then at least you can almost divert the liability and say, well, we outsourced it, what more would we do to a reputable health and safety company? So yeah, they're the steps that people need to take. The other thing to do is, when they've carried out their risk assessments, is to share it with their staff, because there's a number of reasons for that. Obviously, to get people on board, to get people back into the spirit of coming back into the office or the business, whatever it may be. But also because there are rights that employees have, that if they don't feel the business has carried out a sufficient risk assessment, if they believe that there's an imminent risk of danger, they are entitled to say, I don't feel that the business has carried out a sufficient risk assessment, so therefore I'm not going to come back into the business. That employee can't be placed at any detriment, which means pay, terms and conditions, etc., and could potentially pursue a claim for unfair dismissal or constructive dismissal if they say either I have to resign because I don't believe the business is safe, or if the business then dismisses them based on their lack of coming to work, there could be a claim there for unfair dismissal. So it is very much a matter of sharing those risk assessments with the employees and getting their feedback, because at least then if you've shared it, they've had the feedback, there's less likelihood that someone's going to take you to task over it.
Thank you, lads. We're looking at reopening our office in a couple of weeks, because some of the staff are desperate to go back. Some are quite happy working at home, and a few others like me are kind of in the middle. I've got into a nice routine working at home. It's nice to have to pop outside for game of tennis, or in my mansion. But it's nice to go around, do stuff with the girls and what have you, but also be nice to be back as well. And I guess that leads into just kind of the last question, really, and it's to the panel, but I'll let Alex answer actually. Panel I've been through quite a bit in the last few minutes is just about the panel's views about bringing staff, and do you see actually the future is, do you think most people want flexible working, or do people want to be working back in an office? What do you think on that one, Alex?
Yeah, I think that's probably accurate. I think it's probably sped up that conversation where we've been lagging on it for a few years as employers in the UK, where we understand the potential benefits of it, but do we really want to progress with it? Do we really want to push the button and do that? How much control we have over our business, and will people do as much work at home, or will it be less or more productive? I think this is really kind of, for me, it's shown that the businesses thankfully managed to get through COVID-19 quite well. People have been working from home quite well. I still think, though, that there is something to be said about having an office space, and where you can have those corridor chats, and you can meet people face to face, and go to see people face to face. But certainly, I think that there is room, both in my life and our staff's lives, going forward, for them to be working from home. It's undoubtedly increased efficiency, giving them more time with family as well, so they're happier with that type of thing. So yeah, definitely for me.
Yeah, and certainly like for our team, we've got. I mean, I'm quite lucky, and I've worked from home at some point for the last 20 years. There've been, it's been, a day here and there and what have you, but the option's been there, and it's kind of great. And some of our team do it already, and I think others will continue to do so when we go back. And I guess, Daniel, just to show, I mean, how have you guys found it back? Obviously, you've been back in the office for 2 weeks now. How's that been?
Yeah, I think the first day it was a bit strange, because we'd all been working from home for the best part of 3 months, so it was very staggered. There was only 5 people in the office at any one time. So for us, day one was a bit almost out of everybody's comfort zones, because it was back to a new normal. So it was quite bizarre the first day. But I think as time's gone on, certainly myself, I've found coming to the office more productive, because obviously I've got 2 little ones as well, as have you, John. So it's balancing those things of obviously doing your work, making sure the kids are fed, they're not fighting over the pencil sharpeners, etc. So I found coming into the office a couple of days a week really beneficial for me, that I'm able to come in, focus, get my head down, catch up on things that maybe I've not been able to catch up on the day before. But like you, I think like everybody, there are those benefits as well as when you finish the working day, you're not having to get in the car and sit in the car to get home. You literally switch your laptop off and you're in the garden, sitting there enjoying sunshine and spending time with the family. So I think a lot of businesses will probably have some sort of halfway house, if I'm honest. And certainly the office businesses that we're in discussions with, that's what they see as certainly the foreseeable future, because it obviously coincides with the social distancing, so it keeps that element of safety, and also it gives benefits to the staff and also to the business to say, well, look, if we've got happier staff, they will be more productive, they're more likely to give and take should we ever need things back in the future. So my personal view is it will form some sort of halfway house.
Thank you. And on that, Alex, I'll hand you.
What was that? Sorry, John, it fuzzed out then.
Sorry, I was going to say, thanks, Daniel. So, and on that, Alex, I'll hand back to you to wrap up.
Yeah, so thank you everybody for attending today on this hot and sunny day. Really do appreciate the hour that you spent with us. I hope it's been useful. Again, what we will do is we'll probably put a date in and email you in the next sort of few days with the next session. I've also recorded this session, so that will go up on social media, and I'll post a link out to that. If there are any questions that anyone has specifically for us or for anybody else that we might know, feel free to drop us an email across. I'll include all of our email addresses on the email trail, and hopefully look forward to seeing you soon, maybe even for a socially distanced coffee in the future. You never know. So thanks very much, and speak to you soon.